Hey traders, Rocky here, and in this premium video, I think the question we have to ask ourselves as we set up for next week, which is kind of what's on my mind on a Friday afternoon, is did we just witness a massive pump and dump? And I don't mean anything diabolical. I mean literally the rally that we saw into the close, okay, through here, is this something that we're going to see follow through in on Monday? One of the things that we've been doing, we want to stay consistent to our process. One of the things that we've been doing really consistently is saying that typically over the weekend, we hear more about the increased numbers. We hear more about the spread of the virus, and it's seldom good. And we have 48 hours essentially of pent up news that finally gets, to the market when we open on Sunday. And it's not like it's usually good news. It's more negative news, and then the market typically sells off. We have seen other Fridays going into the weekend that have rallied like this, namely last Friday that resulted in a gap down, a historic gap down on Monday. Now, I'm not saying that's what we're going to get here at all. Mostly what the market got from the president today was, I believe, what it expected on Wednesday. So certainly they course corrected, and good for them. But this is where I'm looking at a double red market overall in the broader averages. We don't even have the beginnings of the kind of earnings misses, the kind of revenue guidance. We're still getting, locally, and I've been hearing more and more from the members saying, look, my kids are home from school. Locally, for example, my mom works out at the community center. They've closed. Schools are sending people, the kids home. We haven't begun to see the economic impact. Now, it's good that we now know that, there are funds being dedicated to what will ultimately be bailouts of multiple industries, small business, travel, oil, shale sector. I mean, there's a lot. We don't even know the totality of it. So my point is, if we have unknowns and we still have bad news, negative news, that the market has to digest, this is going to ultimately be, the higher we rally, just another opportunity for us to short, to buy puts in the broader averages, perhaps in select stocks, and get long the yen. Now, I have to spend some time talking about the yen because the yen really is the hero of the day as far as I'm concerned. Even when the market had a quick sell-off midday, when the announcement of the national declaration, the emergency, whatever you want to call that, declaration of a national emergency, is that it? When that was released, the market sold off. The market was justifiably freaked out by that. We saw the yen strengthen temporarily, still the number one weakness story from a relative performance standpoint, and significantly down, in this case, 2+%. We saw the market basically rally, the yen rally, while the equity markets sold off. And that sell-off was actually pretty problematic because, unfortunately, it really shook up the buys from the bottom of the range and the V-scores that we set up with the calls. Now, one of the things that I talk a lot about, we're going to talk about some numbers here, okay? So that was the sell-off, and the reason that was so key is it broke some of the significant lows that I don't want to see broken if we're going to hang on to long calls. We broke some V-score support, we took out the clearing range low, we accelerated below that. But let me bring up something that I shared with the group. All right, so one of the reasons that we have been day trading futures contracts with either the futures options or the ETF options is because these types of events, and specifically the one that we had this, late into the morning or early afternoon, the midday doldrums, was one that wasn't warned. In other words, we just got a quick random announcement that there was going to be an address at 3 p.m. The 3 p.m. address is what I would call a scheduled event. We can prepare for it, we can enter before it, we can exit before it. It's a known quantity. The market has an opportunity to discount what it thinks may happen. So it's a completely different psychological event because there's a specific time and a specific event attached to it. To get a random headline, to get a random soundbite, to get a quick announcement of something that we did not know was going to occur makes the market suddenly, swiftly, sometimes, as you can see with the volatility, discount or digest something it did not know before. And that's when you get these sudden moves without really any kind of warning. So that's what we had here. So if you buy we bought NASDAQ and Dow calls. That was the set of alerts that I sent out earlier this morning to trade based on the tests of the V-score extremes and the lows, right? We set up the and we set up the Aussie yen and New Zealand dollar yen, which I'll talk about as well, into this event. Now, because we know that historical price movement ranges haven't been giving us the kind of confidence that we like to see in terms of the predictability and holding as support and resistance, again, we're playing the options. So we looked at the clearing range low, we looked at nearby psychological levels. Again, what the pause today was, why did we see volatility, unforeseen event, headline, news, soundbite? And then here's an important thing. Did the yen make a sudden swing? Did the yen change its mind about being the number one weakest currency, which is what kept us bullish? That's the directional bias. That's why I will not entertain shorts. In fact, once you see I start sending out alerts, you'll notice they're all in harmony with what the yen is telling us about whether or not we should be buyers or sellers, whether or not we should be bulls or bears, okay? Now, here's where, this is straight from the market money math class. You can control your risk a number of ways. You can control your risk based on dollars, which is completely, I think, random. You know, I'm willing to risk 300 versus 500 as a stop, I find to be a faulty thinking. I'll get to that in a moment. But I will say that per trade, I don't want to risk more than about 2.5% to 3% of my account. All right. Now, if you calculate, once you buy the DIA calls or the YM calls or the QQQ calls and the NQ calls according to our alerts this morning, however it is you position yourself mimicking a long position, you've got to ask yourself how much of that premium, 10%, 20%, 25%, can I lose without reaching this threshold? This is like your uncle point. This is not your stop loss. This is where you determine something being affordable or not. So a lot of people just use that as a stop loss. That's not what I'm advocating here. But it is something we need to be aware of. So that's one thing also to think about. Like, okay, wait a minute. This trade is actually starting to exceed my allowable amount of risk tolerance. And it's exceeded sort of the zone that I would have preferred it to stay above. Now, when I took a quick survey in the room, which is really interesting, we had two levels. We had an aggressive level, I call it aggro, and we had a conservative level, right? We had aggressive and we had a conservative level that we were looking at. And a lot of you that said, hey, I took the conservative level, I think the upper end of risk was something like 10 or 15%. You know, how much was your premium value down by? And most of you said, it was somewhere between 10 and 15%. But those of you that took the aggro level reported back, we were down 20 to 25% from the aggro. So first of all, what did a lot of you learn about yourselves? Either you're positioning too large at aggro levels, or aggro levels simply aren't for you, and that's fine. Most of you said, Brock, it was pretty easy to hold from the conservative buy to the low because what I lost in terms of what I paid for was so insignificant that I really wasn't in any danger of getting in the vicinity of that maxed out, that 2.5% to 3% was nowhere near that, in terms of loss to my account. Made it a whole lot easier to sit through. What else made it a whole lot easier to sit through? Well, I spent a lot of time in the free video talking about the yen. I spent an inordinate amount of time in the chat room talking about the yen and what remained below the VWAP and generally speaking weak. Below the VWAP cluster, below the, in this case, we also have the zero line of the V score. I mean, what stayed bearish all day long? The yen did. So if my yen stays weak and bearish, I know, while there are exceptions, the higher probability trade is to stay long. Not buy the highs, but think about the lower end of the range and stay long. It's the path of least resistance for stocks to move higher when the yen is weak. And that's our directional bias. That's sort of our, I don't know, like our North Star, if you want to think of it that way. So back to our our YM and our NQ. The other alerts that I sent out were, pay yourself while you can, not when you have to. We had really two exits. One was pay yourself somewhere earlier in the morning, and preferably before the 3 p.m. POTUS address. So we had two exits, one based on time at about 1:30 Eastern, and also the V-score readings on the Dow and the NASDAQ. By the way, again, you don't need it, but I do use it a lot. I only have one set of premium tools, and it is the VWAP Max tool package. It's 3 indicators: the V profile, the anchored VWAP, which is what I use to make the clusters, and the V score, which you see at the bottom of nearly all my charts. It's the only premium indicators that I have. Everything else I make available free to members, and it's on sale right now. I think it's 50% off. Just wanted to mention that. So if you are curious, this would be a great time to pick it up at half off. So the thing that we knew is that around 1:30 we wanted to pay ourselves, and we wanted to get out before 3 o'clock. Now, let me explain, because I know a lot of you watched the rally just as I did when it started. Why would I want to get out by 3 o'clock? It has nothing to do with the question of how much could I make. It has everything to do with the question of how much could I lose. And that is what professional traders ask themselves time and time again. How much could I lose if I'm wrong? How much volatility will I have to tolerate? We tolerate a lot of volatility, and it is a Friday. So we know that as the president started speaking, we started getting a sell-off, which is really what I anticipated. And then as news of all the things that they were going to proactively be doing. Again, this is not about politics. I'm not making any judgment call. The market spoke. That's what I'm looking for. The market said, we like what we're hearing. We wished we heard this on Wednesday. We like what we hear. All right. I do want to mention something, by the way, and we kind of, not jokingly, because I don't take these things as a joke, but one of the things we did discuss in the room was the fact that this was probably, because we saw this last Friday into Monday too, probably an epic pump and dump. We're already trading 80 points from the high. We topped out at 7,900 and change, and we actually sold off to about 78.10. So we've already peeled 90 NQ points since that rally. Do I expect the market to have a huge gap down like Monday? I don't. But do I expect the market to be up on Monday? It might be at the open. But I would use that very likely if we get yen strength to short into. So the yen's going to dictate what we do on Monday, gang. All right, let me wrap this up here by mentioning that we are looking bullishly at the 30-year bond, and we are looking bullishly at gold. I'm going to send out some separate video update over the weekend to talk about that, but we are looking at pullback buys. Those were both sent out as alerts. So I'll send out a different update on that. But I really wanted to talk about the yen and the index futures trading and what we saw, how we traded it, and why we stuck to the long side all day long. All right. So that's it for today. I will see you all in the next update. Have a great weekend. Be good to each other, and I will talk with you soon.